Alrighty. So today we are going over um, where is it? How the market moves and why slash algorithm theory. Tomorrow we're actually going over liquidity. So this is it's a little bit mental, but then it's also kind of just telling you guys like why the market moves, how it moves, and what it wants to do. So essentially, if you know who ICT is, if you know most of these concepts that I'm talking about or you're going to be learning, these are called smart money concepts. ICT has really familiarized them with a lot of the traders. A lot of the traders that you see nowadays trade these concepts. And essentially the concepts, they essentially work by saying that the banks, the big banks, so for those who do not know, the banks are the ones who move the markets. The top of the line people with trillions and trillions of dollars in assets, the people who come in, the hedge funds, all these people, they're the ones who really move the markets. They're the ones who really determine where the market wants to go. Believe it or not, the market is actually, in my opinion, on a complete algorithm. I think the market doesn't just move because it moves. It moves because these banks want it to move and it wants to follow the algorithm. So you maybe hear me say the word algorithm. What is the algorithm? Well, essentially the algorithm is saying to essentially move the market in any direction, we must first take orders to then take orders, right? So essentially, as you see today's a perfect example. What did we do kind of all night, right? We kind of just sat in this whole range, right, with these highs, and we kind of just, as you see, it's kind of just like a box, right? Just a whole bunch of people are coming in and out, and then New York session comes in, right? What happens when New York session comes in? Well, as you see, the market wanted to go lower, but the market can't go lower without doing what? Taking orders, right? So what did it have to do first? It had to take out all of these orders, all these people who got really good like fills. So like let's say if you're a top ticker, let's say you entered here with a stop like all the way up here, right? And you want to go all the way down here. And like let's just say then the people also entered here. Just so on and so forth. Oh. Here and here, right? So the market cannot move until all these people have been taken out, or at least the majority of them. So what happens? The market moves up, takes out all of these orders, then proceeds to move lower, and it's the same exact thing on the other side, right? If you wanted to go long today, and let's say you're the bottom ticker, go long there, go along there, go along here, right? All these people then also got taken out. So there's two sides of the story. There's the people who tried to call the shorts, they maybe overshot, and now boom, they're taken out by this move. And then the same thing, if you try to call longs, what happens? Well, you get screwed over and get taken out as well. That is how the market moves at all times. Now, when we're moving at all-time highs, it's a little bit different, but essentially that's how the market works, right? To take orders, you must take orders first. You must, if you want to go higher, you need to go lower to then go higher. And if you want to go lower, you must go higher before going lower. Now, obviously, there's circumstances, though, where if the news comes out when we just tank, that's a different story. And then if we're pushing all-time highs, that's also a different story. But in most circumstances, that's what you need to see on a daily basis before understanding where the market wants to go, is a whole bunch of orders being taken out and then the market moving to the other side of the orders. That is how the market moves at all times. Now, it gets a lot deeper than that. I don't want to get too in depth, but there's a lot more things that then involve that, right? So if we come over to the higher time frame, there's such thing as gap in price. As you see, I have an indicator for it. It just tells me immediately. As you see, there's a huge gap in price here. We just tanked. As you see, there's a huge gap in price here. We just tanked. What does the market need to do? Well, it needs to take out orders. As you see, took out a whole bunch of orders. Now, keep in mind, this is the 4-hour time frame. To take out those orders to move higher, well, we took out all the orders, moved higher, and all these gaps must get filled at some point, whether it's over the course of a second, whether it's over the course of a minute, an hour, 4 hours, 2 weeks, 3 weeks, a month, a year, whatever it may be. These gaps must be filled at some point, and these orders must be taken out at some point. Now, obviously, if you're looking at like the overall market, there are obviously, this goes all the way back to 1999. So obviously, a lot of these orders won't be getting taken out anytime soon, but it is just naturally how the market works. is that most orders should be taken out. Look at the majority of these orders, right? If you're a long-term investor, boom, a lot of these orders got taken out. People probably panic sold, moved higher. Same thing here. All these orders get put in, gets taken out, people panic sell, goes higher. That's how the market works at all times. So yes, we're day traders. Yes, we only trade within an hour of the day or just within the day, but you have to think about the long-term investors as well. A lot of people will just see the price. They only look at the 4-hour daily time frame, right? And when you're a long-term investor and you're just catching the wave, right? What are you going to do when you see this on your chart? Most of the retail people are going to be like, oh gosh, that's like if you see this, let's go into replay. If you see this, if I'm a long-term investor, I'm going to be like, okay, yeah, that's a little scary. Maybe I'll get my money out, especially if you invested up here. You would want to take your money out, and boom, as I was saying earlier, what is that? The market taking orders for it to then move higher. That is kind of the general basis of the algorithm. There's a lot more into it, as I was talking about, with gaps in price and how those gaps need to be filled. That then trickles all the way down to the 1-minute time frame, 30-second time frame, and so on and so forth. So the general basis of the algorithm is the theory that these banks use a set sequence and a set algorithm to essentially determine when they want to enter their trades and essentially push the market lower or higher depending on what they think. And now again, you're probably like, well, how can just one person move the market? Well, think about it. We're only coming in with a couple $100. These people are going a lot more in depth. They're going in with millions upon millions of dollars, which is moving the market. Yes, that will be definitely, I think, let's see when that is getting talked about. That will be getting talked about on Monday of next week. All the gaps will be getting talked about. So just remember those gaps. Those will be getting touched on very in depth. I use those all the time. You probably just don't even realize if you don't know what they are, but those will be touched on very in depthly. Those are 2 whole days where we'll be going over just the gaps, but not just the gaps. There's also order blocks, which essentially are like a bunch of orders getting like put in place. So like if you see this, see just like this square that I was talking about, right? On the lower time frame, it doesn't look like an order block, but if we come up to the higher time frame, where would that block be? As you see, it's just a bunch of orders kind of forming as almost like a block, right? Just a bunch of orders accumulating. What do we see? All those orders get taken out, and boom, we push lower. So that's just how the market moves. That is the sequence of the algorithm. As you see, this is a perfect example of a gap getting filled. Gap in price. What happens? A gap or a wick comes into the gap, gets filled, and then pushes higher. So that is the general understanding of kind of all this. As you see, another kind of just block right here, another block right here. And then you just see plenty of gaps within the market that are getting filled, and so on and so forth. So that's the general understanding of the market and the algorithm. A lot of people like to say there's no such thing as an algorithm, but if you look deeper into what actually it means and how the market has moved for the past almost 26 years now, there definitely is an algorithm. There is something that is happening that a lot of people don't understand, but when you do understand it, it's kind of mind-blowing. And you kind of understand, like, holy crap, okay, there is something going on here, and people are taking advantage of what's going on. And people also want to argue, no, these banks do not use the algorithm. Well, you can also look back further into the books from the 1990s. I personally don't look at the books, but I like watch podcasts, listen to people who have looked into those books, right? And a lot of these people talk about how, yes, there is an algorithm. When these banks sat down and formed their whole hedge fund, or they formed their whole investment strategy, their strategy evolved around some sort of algorithm where essentially they need to see this, this, and this happen before they're entering in with big money. And that is essentially a algorithm, right? They're the ones who move the market. They're the ones who push everything, and that is just how it works. Now, going even deeper, this is kind of conspiracy, but it's very true. I want you guys to take a little flashback, right? The market was at all-time highs, right? And when you're at all-time highs, we need something to happen before we push higher. Or we need people to come out of the market so it gives people a better opportunity to buy in. This is around when Trump got elected, right? Pump went up, my price went up, right? I don't know if you guys remember when Elon and all of them were fighting, right? Elon and Trump were going at it on Twitter. What happened? The market absolutely tanked. Everyone's like, oh my gosh, Trump is not a good president. This is not good. The country's going to just collapse, people are selling. And now again, when you're at all-time highs, it's a good time to sell if you're just a general long-term investor. Yeah, we're at a good price, I'll get out here. So that's kind of what happened, right? They stirred up the commotion. People were like, oh my gosh, like I need to get out, like this is not good, we're gonna tank. All this is going on. In reality, yes, they could have been fighting, but it also was very much probably to push a narrative within the market. Same thing with the wars. I know it's very sad to say, but wars are essentially for people to make money. Whenever wars happen, people make millions of dollars, even more than that. It's pretty ridiculous. It's very sad to hear, but it is the honest truth. When things happen, people get scared. That is a way to just push the narrative to get people out of the market so people can buy in at a better time. And as you see, that's exactly what happened here. Around this time, Elon and them were fighting. Then there was like the potential war breakout, even more of a tank. And then what happens? You don't hear about it for the next couple months. And what do we see? We push all-time highs, and possibly will take out the highs pretty soon. So just coincidentally, you can take another example. Let's go back to 2020. If you guys have seen the TJR clip talk about this, let's go all the way back. So yeah, that was the big dip, right? Let's go all the way back to 2020, right? What happened? Same exact thing, right? We come into 2020, things are looking good. What do we have? COVID comes out. Okay, shoot, COVID just came out. Feels like the world's going to end. All the retail sellers are selling. People are like, yeah, we're at all-time highs. I'm out of there. I don't like what's going on in the news. COVID comes out. Boom, we tank. What happens? We absolutely freaking skyrocket, and people come out of the market, and now they're late in the market, and we just absolutely pumped. Now you could say that's conspiracy theory, but it's crazy how if you align the times with what happened, when things happened in the market, pretty insane how the chart perfectly reflects that, right? You have COVID, you have Trump getting elected and then fighting on Twitter, and then you have the possible wars break out, we get a big dump, and now you don't hear anything about it, and we are pumping and pumping. So pretty interesting when you actually look into what has happened in the market and why it's happened. But that is just furthermore even more reason why there is most definitely a narrative that gets pushed within the news, and definitely a narrative for why there is most likely an algorithm within the market. Now again, this is on the daily time frame, but look, you can take this even further. Remember that example where I showed you the block and then the orders being taken out? Well, look at this, somewhat of a block that we formed here. What happens? The news comes out, the market just absolutely tanks, wars come out, all these orders have been taken out, and now we've just pushed immediately higher. Now again, you can now say, okay, well, something could happen now that we're at all-time highs, where they could then push another news event that then gets people out of the market for then a better chance to buy, and then it goes back up, right? So that's just how the market moves and why it moves. So just, again, be aware. Now that you know about this, be aware for the news that comes out. Understand, okay, is this something that's going to affect the market? Why is it going to affect it? And then how could we actually bounce out of this? Now, when it's like the financial crisis of 2008, that's a different story. You could even say that was technically a narrative being pushed, right? If you're a smart money investor and you understand, okay, we are tanking, but I know long-term, like, things are going to hold up, so I'm just going to wait for that good bottom to be put in, and I'll invest my money, and then things will go right? The way I think about the markets is it's almost a guaranteed path to just keeping your career, right? I always tell a lot of my friends, they're always like, bro, AI is coming out, it's going to beat the markets. Well, if AI comes out and beats the markets and the markets go to zero, I'll tell you right now, if the markets are at zero, everything around you in your everyday life is also going to be at zero. Like your family's going to be struggling, everyone's going to be struggling, the whole world's going to be struggling if there is no market, right? It's just how it is. If all the markets go to zero, then everyone's going to be struggling in every aspect of their life. Every business, every person, everything is going to go to zero, as well as the markets. So as long as the markets don't hit zero, the government and everyone in this world is going to do anything and everything they can to keep the markets up and keep the just overall well-being of everyone, keeping it moving forward and kind of just pushing through. That's just how it's supposed to be. It sucks to say that, but now that you understand that, just keep in mind moving forward that these things come out for a reason. It's not, it's news, but it's also to push a narrative, get people that are just normal people to either invest in the market or get out of the market, and then essentially just repeat that process over and over. That is just how the world works, and it's pretty insane, but you got to remember, the NASDAQ is the top 100 companies in the entire United States, right? The United States is the global power of the world, And if the United States goes under, a lot of other countries are going to go under, and I guarantee if the United States goes under, a war will break out. That is just how it is. I mean, this is all speculative, but it's all so true, and it's all just kind of, I mean, if you guys can kind of see eye to eye with me, I don't see like how you could disagree with a lot of the things I'm saying. I think it's very, very valid, and also just what a lot of other people think. But yeah, that's kind of the whole thesis behind kind of just how it all works. Y'all got any questions on that so far? It's a very like simple concept, that just the market moves for a reason, and the people with a lot more money than me and you guys have are the people who move the markets. So. And they move the markets for a very specific reason. They move it because there's something that is pushing them to actually come into the market, and they're trying to push a narrative to either get people to buy in or sell. Yeah, again, every session from last week on out will be getting way more in depth to actually how I trade, kind of like this is the very base understanding. This is what you need to understand the market, and we will just keep getting deeper and deeper. For example, tomorrow we'll be going over the first concept. I already kind of touched on it here. It's basically the concept of liquidity, where essentially orders come in and they get taken over and over, but it goes a lot deeper than that. Where essentially, as you see, like this would be liquidity. Liquidity gets taken to the downside. What do? We then take all the orders to the upside. We'll be going over a lot more in depth to that, just how you can literally you could simply just use that as a concept and make a lot of money within the market. But then if you want to get a lot more technical, that's what we'll be going on through for the next month and a half or so. Yes, I think it's quite difficult to trade all-time highs. I prefer actually markets like this. I prefer when it's crashing, or like I prefer this period right here, or this period right here. I actually don't like all-time highs just because, as you said, yeah, the unpredictable news. At any moment, the U.S. could get bombed, or something like COVID could come out or something, and the market just tanks. And then you can, if you understand like literally what I just talked about, then it's actually easy to catch moves like that. But when it's at all-time highs and we just start pumping higher for no reason, it is definitely difficult to try and catch a move to the upside. And then also when we're at all-time highs, you're not really supposed to short. You shouldn't really be calling the market going lower, just because of the general understanding that most people that don't understand the markets are just going to see a green number on their screen and be like, oh, the market's looking good, I'll add some money in, and then that pushes the market higher. But in reality, that's not like, you shouldn't be thinking like that. You need to be thinking more strategically in the algorithm side of things, like, okay, I need to see, before we go higher, I need to see something lower happen, and then let's go higher. But when we're just pushing all-time highs, it's kind of hard to determine how high are we going to go, where are we going to go to, especially if there's no targets to aim for. Yeah, I mean, unfortunately, the setup was good. Now, again, I wish I could, I mean, as you see, my bias was there, it just wasn't there at the right time, right? I could have been more patient. I expected, honestly, today, my thinking was, my thesis behind the day was, I thought we were just going to push a lot higher. I did not think we were going to dump it all today. I thought we were going to push towards all-time highs. I thought we were just going to kind of keep running up here. And plus we got like a gap that got inversed. That's for another session. But like when you see a gap like this get pushed through, most of the time it's going to keep going higher. But we didn't get that. But my thesis was essentially, okay, we have a lot of orders building up here. I want to see us duck lower, take out a lot of these orders, and then push higher. So I wanted to catch that first leg, but instead we kind of did the exact opposite. We actually pushed higher, took out all these orders, and then pushed to lower. So my thesis then moving into tomorrow is, since we took out a lot of these orders tomorrow, I am expecting something like this. Maybe take out some orders and then kind of push higher. But we could also just simply, kind of retrace a little bit back up, and then, I mean, who am I to say that we couldn't just keep going lower, right? So that's kind of how my model is based around. A lot of people are like, bro, why are you going break even so fast? why are you doing this, why are you doing that? Well, none of us are perfect in the market, and we aren't the people with trillions of dollars that want to move the market. So essentially, like, whenever we take out something, like if we take out orders right here, who's to say we're not just going to take out these orders and then just push immediately higher, right? So that's why I go break even quite quick, is just because I'm not the person that's coming in with $1 trillion to move the market, right? I'm just an average trader who's trading a small amount of money. I'm literally a shrimp compared to the whales that are in the ocean that have the trillions of dollars in assets, right? So I'm just here to catch my little move. I'm not trying to be like over cocky and be like, yeah, I'm thinking we're going to keep pushing lower. After taking these orders, we're just going to keep tanking. That would be very egotistical and not what you should be thinking. Yes, that's exactly why I use it, Kelly, is you're literally just catching the momentum of, and that's essentially what then ties into the algorithm, right? I'm trying to catch, okay, right here, for example, right? This whole move was probably determined by people with a lot of money, right? This whole move right here. I would just say, okay, I just want to ride the wave. You know, have you ever seen like the sharks that swim in the ocean and all the little fish that are underneath the sharks? That's exactly what I'm trying to be. I'm just trying to be a little fish that's riding with the shark to whatever destination it's going to. I'm not trying to be the shark that then is making the move and being the destination, because obviously I don't have that money to do that. I just want to be someone who's part of the train, catching the move down to wherever they want to go to, and I'm just catching my small part of the move, and I'm in and out, and it's done like that. There's nothing, I'm not trying to call the market. I'm not trying to go over I'm not trying to do the most. I'm just trying to be very simple, ride the wave that's already happening, and just call it as that. I'm not trying to do anything crazy, because a lot of these traders, they're trying to be these big banks. They're trying to be the people that have a lot of money, but they're just trying to like catch it before they come in, right? And that's a very difficult game. That's the reason the markets are one of the hardest jobs in the entire world, is because people make it a lot harder than it needs to be. If you just follow what the big people are doing, you're going to make a lot of money just being very precautious and just doing what you're supposed to do when the other people do it. Yes, I actually tried. Oh yeah, so yeah, Forex. My strategy works amazing in Forex. I have a lot of past students who actually trade the foreign market. I've traded Forex myself early on. I don't trade it anymore though. And then, I mean, if it works in Forex, it'll work in gold as well. Because again, Forex and gold is the same exact thing. There's people who have a lot more money than me and you have that are moving the markets. These banks in foreign countries. Gold is moved by governments. Governments have the most money in the entire world. So, and that's also moved by news. So the algorithm goes into all that. I see that you're typing, so I'm just waiting until you finish typing. Based on your Power of 3 understanding, just want to see how you look at this. Can you check USD ZAR on the 4th? If it should have an expansion soon. Yeah, let's take a look at that for you. Let's see here. This is the correct one, correct? So yeah, I mean, I would say, I mean, look at all these orders that we have here on the 4 hour. Let's see. Okay, so yes, we could possibly be pushing lower. I have a concept called double manipulation, although just because I don't assume that markets are just going to tank, I would assume that I could see something like this happening, where essentially we took out these highs, but then that's all just manipulation for us to then take out these orders, right? So you go here, here, and then I would assume we actually probably push up through that, for my understanding. As long as no news comes out that's insane, that would be assume what I'd expect. But in this move here, yes, I would expect us to go lower. But again, I'm not the market maker, so we could have easily just taken out these orders. This could be a retracement and we keep pushing higher. But from my understanding of most markets, I would expect before us moving even higher, I would want us to definitely see us take out these lows and then push higher. So as you see, I can literally I can go between any asset, any stock, anything, and the same concepts and the same algorithm applies. I mean, yeah, red folder days, that's exactly what news is, right? Let's go to example here. I would expect, because we have news tomorrow, if you guys have taken a look at the calendar, we have CPI tomorrow, which a CPI is a big mover within the market. That's where I would possibly expect us to most likely. CPI comes out and we get some good news. Maybe we just do this all night and then we create a whole bunch of orders, right? I'd want to see the news be some sort of manipulation where it pushes us lower, for then giving the smart money investors and the people with a lot of money a good place to buy in, for us then to move the market higher. That's what I'd expect. But again, I can't necessarily call that. We could so easily just sit here, put in these orders, and then the news comes out, we go a lot higher, and then since we went a lot higher, we then trickle down to like 50% of this, and this is another concept I'll get into, and we trickle down to like 50%, and then from here it would be a determination of how the higher time frame looks. And if the higher time frame comes from here and keeps pushing up, then yes, I'd assume we keep going higher. But if we come through here and do something like this, then I would expect we kind of push into like this 50% range and kind of just sit here. Because then we have more news for the coming week. So it could be one of the either one of those I could see definitely playing out tomorrow. But yeah, whenever you see these news drivers, like for example, for the rest of the week, we have a lot of news. Keep in mind what I just talked about, how news is fabricated for the algorithm. Most of the times it is there for a reason. Most of the times it is, yes, it's real news, but it's also skewed for people to be able to get into the market at a good time, for the people who have a lot of money, so they can get in. So then the retail investors either sell or buy in at a bad time, so then the real people can come in with the real money, buy in at a good time, and then actually move the market. And that's kind of how it all goes. So keep in mind with what I just talked about for the rest of the week. See how the market moves. Keep these concepts in mind and be like, okay, Andrew was talking about how we need to take out orders before moving higher. Well, is the news going to come in? Is going to take out a bunch of orders? And if we do so, then I can expect us moving higher. But if the news comes in, we just keep going higher, then it'll just be a kind of a toss-up of what could happen after that. You got to remember, Trump is literally the economic king of all presidents. He is in there for mainly economic reasons. So a lot of the things he does is for economic purposes, to move the markets, to manipulate the markets so people can buy in. He's in there for a reason. And a lot of the things he does right now is to move the markets. So keep that in mind, like when Trump talks about things or passes bills for things. For example, the tariffs were also involved in that big crash. Those tariffs came out, right? And then he literally just dropped the tariffs after we had this huge crash. Tariffs just disappear. Boom, we start skyrocketing up. We also got billions of dollars from the tariffs. So, I mean, people are like, oh, the tariffs are awful. Sell, 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 sell. Elon's calling Trump a bad president. Sell, 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 sell. A war's breaking out. Oh, my God, sell, 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 sell. And you don't hear anything about that for the past couple of months, and we just keep trickling up. Coincidentally, right? Funny how that works, but it's all for a reason. How long did it take me to find my model? It took me relatively, I would say, about a whole year. A year of just kind of trial and error with a whole bunch of things, discovering, like, because I was kind of self-taught. Like, I obviously learned concepts from people, but when it came to putting the concepts together, that was all kind of on my own, and all things I kind of did for myself. But once you understand the concepts, a lot of my students, they're becoming profitable within 6 months to under 6 months, with me teaching the concepts properly and then putting it together for you essentially. So that's kind of the whole point. Like, I wish I had gotten some sort of mentor, or some sort of coach early on, because I would have fast tracked my entire process by 6 months. But instead, I kind of went the longer route. But I don't regret anything I did. I'm glad I came up with my own model. I'm glad I kind of did it all for myself. Because then I'll preach. Once you learn kind of what I've taught you, once I teach you my model, once you kind of learn everything for yourself, yes, you can copy and paste my model, but at the same time, even when you copy and paste my model, you're not going to still take the same trades as me. So understand my model and then kind of go out with what you want to do with that model. Because you can go out and still make your own model out of my model, essentially, with little tweaks, and all sorts of little things, just based off of learning the concepts that I've taught you, learning my model and how I use it. And then you can take that and make it whatever you want. It basically is just going to fast track the whole process for you. Oh, it definitely will be possible very soon with this model. Literally, one of my students who went to my school, he just stopped me in the middle of my street last year. He was like, "Yo, is your name Andrew?" I was like, "Yup." And he was like, "Yo, I've been trading for only a couple months. Like, can you like help me out at all?" I was like, "Bro, I'll literally get you in the group for free." And just went over to his house the other day. Just got paid out $2,000. So, literally a couple months later after meeting me. Yeah, it's pretty insane. Go for it, man. I would definitely stay. I would stay on paper if you're new. Stay on paper for a couple months. Just go through this whole boot camp, get my strategy down, do it on paper, back test it, and then once you feel like you're confident in the back testing and on paper, then go for a funded account. But if you already feel pretty confident, then go for it. But I would say I would definitely wait a little bit. TradingView by far is the best place to paper trade. You can literally, I don't know, I think you have to pay like the $10 membership, but if you just pay, you get this little paper viewing tab, and you connect it, and boom, you are good to go, and you can just start trading immediately live market. I think it might even be free. Don't know for sure though. Again, you don't really need indicators. I just use them just because like it's just easier for me to like mark out. Like I don't want to mark out every single fair value gap, so it's nice to, or gap in price, so that gives me that. Realistically, the only indicator I would actually use every day would probably be maybe this, like the power of 3 candle, like the candle here, as you see, and then the sessions indicator, and that's literally all I would use essentially. I could go without every single one of these indicators though. And again, all my indicators are all the settings and everything's all in the free group. If you scroll up, I'll mark it right here. You can get all my settings and every single indicator I use, all right here. But again, I would also stay on the 1 minute chart. I don't think you need 30 minute. I wasn't on the 30-second chart for a very long time. I've only been on it for about like 6 months now. It definitely helps a lot, but I think you need to understand the 1 minute and the 2 minute, and just everything above the 1 minute before you go down to the 30-second, in my opinion. But once you get that down, then you can move down to the 30-second. Yeah, we can go over to calculate this now. So essentially, if say I wanted to enter a trade right here, I went over that I think in the first episode, but essentially, so again, you can use 145 or 75. So say I wanted to short here, again, this little number right here is the ticks. So let's say if I wanted to do a 50 tick stop loss, it'd be right there, and then the 75 tick TP be right here. So you would click buy, you would type in how many units. So let's say if I'm doing the 50, 75, I do 2 minis, and then TP would be 75, stop loss would be 50, and boom, I'd be in just like that. I don't know why. Oh wait, I have it flipped. Boom, you click buy, and boom, you're in with that exact stop loss and take profit. So like this little, if you come here, it'll be right here, and then, or no, it'd be right here on the left hand screen. It'll be long or short position. If you want a long, if you want a short, you put in this one. If you want to put in like a buy, you'd put in this one, and then measure it out. But if you want to go 145 and if you want to do 145 and 100, say I want a long here, you can mark out, as you see, this is pretty big in this range, but like in some ranges it is a good idea, but I've liked the 50, 75 just because it's a little bit quicker, but I would recommend if you're a beginner, do 100, so as you see, 100, and then go 145 right there. As you see, 145, come in, buy, only do 1 mini, and then set this, because 1 mini and 2 minis, if you split it in half, it equals the same exact thing, right? So you do 100, and boom, you'd be in, and now you have everything set for you. So again, if you're doing 100 and 145, do 1 mini. If you're doing 50 and 75, do just 2 minis. And I would not recommend going above or below that. But then if you're not comfortable with risking 500, then you can cut it in half. You can go over to micros. So this is literally just the NASDAQ, but split into tenths. So let's say I'm only comfortable with risking 250. Okay, well, you can do the same thing. You can do 100, 145, and instead of coming in with, again, this is 1/10 of the equivalent price of the NASDAQ, so you can come in with 5, and now you're only risking 250, but you're only going to gain, like what would it be, like 3 or like 400 maybe. So now you're coming in only risking 250 to make 365 essentially. So it's kind of just based on what do you want to risk. Yep, so minis or micros, it's the same risk, 100 and 145. I never use micros so anymore, I just use minis. It's literally just 50 or 75 or 100 and 145 every single time. Yeah, I mean, in terms of the range right now, like, again, this range is the Asian range, so there's not a lot of volatility, but, like, 50 is still decent in this range. Like, that'd be a lot better. But, I mean, look, if you, like, bring that exact position here, I mean, 50 is, like, nothing compared to this, right? Like, that's how much I'm catching. And then if you bumped it to 145, it's still super small relatively to how big this is. Like, look at that. So, it's just based on, like, kind of where we are and how we're moving in the market is kind of determining what I'll use. Yes and no, Scott. It's all dependent on kind of how we're moving, and kind of just what we've done in the past and kind of what we're looking at. But yes, I do use that. That'll definitely be for another day though. But yes, I do use that. Do y'all got any more questions or anything? This was a good class. Y'all definitely were asking good questions, and I appreciate it. Those who ask more questions are the people who will learn the fastest. I can promise you that. No, class will be at normal time tomorrow, 3:30. But now that I've figured out a new way to record, I basically just stream onto YouTube. I think I was talking about the last time. I stream onto YouTube, and nobody can see it on YouTube. And then I can just basically, since it's already like streaming, quote unquote, I can literally just get the link immediately from the stream that nobody can see unless you have the link. And then boom, it's already there. I don't gotta like record and then upload the recording, which takes like 10 minutes, and then get the link for y'all. It's literally just instantly uploaded as soon as I'm done with the class, which is amazing. But no, it'll be at 3:30, 2:30 Eastern Standard Time, PM. 2:30 to 3:30. Today was just a weird day. I kind of just had to. I just impulsively. I saw if you know anything about E36s and hardtops, it's very hard to find an E36 hardtop, especially for a good deal. Literally just scrolling Facebook Marketplace last night, see one that just got listed, and I was like, okay, yeah, I got to get that immediately. So I literally worked out a deal last night and had to go pick it up today. Had to drive like 4 hours total. It was a pain in the butt, but yeah, it's gonna be pretty sweet. I'm very excited to just keep building it. This was like a big purchase. That was like $2,400. I was kind of pissed about it, but I mean, I had to get it sooner than later, especially with the winter coming up. So, I mean, I got a 4Runner as well, but yeah, still want to be able to drive that thing. Turbo kit eventually. I don't know. I plan on holding. I was thinking about today. I honestly plan on holding that car for a very, very long time. I kind of just want to keep it forever almost. But yeah, I do, like, once my engine goes out, I don't know if I'll turbo swap it, but I probably will engine swap it once the engine goes bad, and probably just strip the whole engine. But I want to keep that body forever, essentially. I kind of just want to keep the car as long as I possibly can, and just keep it as a project car and just have it for years on end. I mean, it's like my dream car. I've always wanted an E36 since, like, freshman year of high school, and I got one. So, like, I don't see a reason to get rid of it. Because, I mean, if the engine goes bad, you can just put a new one in it. Doesn't matter. And, like, there's no rust on the body. There's nothing. It's literally mint. So, like, I'd have no reason to get rid of it. A bug-eye Subaru, bro. I literally had a Subaru. I had a WRX over the summer, and it blew up on me. So it was sad, but then I got the 4Runner because I knew I was about to get an E36. It was run down though. It was a 2016 and it was from New Jersey, and the dude just absolutely fucked it up. Alright, I'll see you, Kelly, of course, man. And bro, it's so possible. Literally, MNDZ a year ago today, I was beyond unprofitable. Was still trying to figure out trading. Literally, I would say did not know nearly as much as I know now. And then the whole year last year, I just went absolutely nuts. I grinded every day, figured out my strategy, developed my model, and from there on out, I've been beyond profitable. April 2026, yeah, I'll be there, man. I will be there for it. Alright, boys. Well, I will catch y'all tomorrow. Again, thanks for tuning in. The recording will be out literally in milliseconds of finishing this. I will see you guys for tomorrow's stream, and then I'll see you guys for tomorrow's lecture. Deuces, everyone. Have a good rest of your day.